We've got 1 month left of this year. And if you're trying to squeeze in a few last-minute tax moves, listen up. I'm going to share with you 3 quick things that you can do before December 31st to reduce your tax bill. Now, are these going to make you rich overnight? Nope. But hey, saving a couple thousands before the end of the year beats paying that to Uncle Sam, right? Here's the first move. Prepay your expenses. If you're a business owner or a real estate investor, you operate on a cash basis. So whatever you pay before December 31st counts towards this year's tax deductions. For example, if you got property taxes, insurance premiums, rent, telephone, vendor payments that are due in January or February, pay them now. They will count as an expense this year. If you want to use your credit card to pay these expenses, but the credit card payment is not due until next year, you can still deduct those expenses in this year. So not only do you get the expense, but you also get the points for your credit card this year. Every dollar that you prepay before year end reduces this year's taxable income. So make sure to gather all that information, prepay those expenses, and keep the documents for audit proof. The second thing you can do is fund your SEP IRA. This is one of the best kept secrets by wealthy people in order to increase their wealth, and you can still get a deduction this year. For this year in 2025, if you have a business, you can contribute up to $69,000 depending on your income. That is a write-off against your business income. The best part is you can self-direct that account. In other words, you can invest that money into real estate, private lending, other businesses, or just mutual funds. So no, you don't have to keep it with Fidelity in order to use your SEP IRA. Let me give you a really quick example of how I've personally done this. I have a self-directed Roth IRA. You can do the same with your SEP IRA. And what I do is I lend out money as a private lender, meaning I lend money out of my Roth IRA to those people who are flipping properties and need money for those flips. In turn, I get not only the principal back into my Roth IRA, but the interest goes back into my Roth IRA, and I do not have to pay taxes on it now or later. If you have no idea what self-directing your SEP IRA, Roth IRA, your HSA, I created a video of a guy who's going to pay zero taxes on $5 billion. And I'm going to leave the link below so that you can watch it. Because like I said, this is exactly how wealthy people create wealth for the future. Trust me, you are going to want to watch this video. Number 3 is get a tax projection from your CPA. Your tax bill is not due until April 15th of 2026. But here's a catch that many of you do not understand. If you owe money to the IRS, you have until April 15th of every single year to make that payment. If you file an extension, it is an extension to file, not to pay. Most people will file an extension for whatever reason and will also not make any payments. Not paying your taxes by April 15th will give the IRS your money, penalties, and interest. So a tax projection lets you know exactly what you're going to owe on 4/15 so that you are not surprised with the tax bill and you know what you're going to owe on April 15th and start saving for that. Paying the IRS penalties and interest is 100% avoidable if you plan early. And let me give you a bonus tip that's going to change your financial future for next year. If you are a business owner or a real estate investor making over $400,000, you need a tax strategist. You need to stop using your parent's CPA and expecting the same results every single year. You are not going to get ahead by using just a tax preparer. Here's how to know if you need a new CPA. Number 1, you only talk to them once a year, and that's when you're preparing the return. They call you up and they tell you that you owe $80,000. Thank you so much. Come and sign your documents. I will talk to you later. That is not a strategist. That is a data compliance person that you are using and you're entrusting them with your wealth. Number 2, they take forever to communicate with you. And number 3, Every time you bring them questions or new strategies that you have seen your other successful business owner friends do, they tell you that you're going to get audited. If your current CPA has any of these, or maybe all, you need a new one. Waiting until the last minute to plan is costing you thousands of dollars every single year. So there you have it. Let's do a quick recap of the 3 things that you could do before year end to save a couple of $1,000s on your taxes. Number 1, prepay your expenses. Number 2, fund your SEP IRA. And 3, get a tax projection from your current strategist. These are fast, simple, and legal, and you can still do them before the end of the year to cut a couple $1,000s off your tax bill. If you found this helpful, please hit subscribe. If you want to work with our team to see if we can help you save thousands of dollars just like we've helped other clients, click the link below to schedule your free strategy call with us, CPA Real Estate Tax Strategist.